Hello, everyone. Welcome to a brand new episode of One Vision, the FinTech Views. This is Theo, your host for today's episode. Now, we're doing something completely different and first of a kind in our history of the show. I am actually on location in Hong Kong as part of Hong Kong FinTech Week and doing the recording in person with the guest of the show. So joining us today is Andreas Mettenberger, Managing Director, Head of Synpulse, Hong Kong. Welcome to the show, Andreas.
Hi, Theo. Nice to be here.
Hello, nice to meet you. Thank you for joining us today. So before we start, can you give us a very quick intro about what you do and what does Synpulse do?
Yeah, absolutely. So Synpulse is a global management consulting company. We are based in all major financial hubs. Came to Hong Kong, therefore, as well, roughly 10 years ago. Had our anniversary just earlier this year for 10 years. And my responsibility here is twofold. One is that I run our Hong Kong office location. And secondly, we also have Synpulse 8, which is our technology house. And there we have certain product solutions, which one of those I'm also responsible for, called Wealth Cockpit.
Fascinating, 10 years. So this is exactly the same amount of time that FinTech Week Hong Kong started. Is actually they're celebrating 10-year anniversary.
Correct.
I did not know that you guys share the same birthday. All right. Well, so let's go right into what you do, right? Wealth management, what does Synpulse do? Digital banking. The entire ecosystem has changed quite a bit in the last few years. I wanted to ask you, what do you think is one of the most underrated challenges that traditional incumbents face in digital transformation journey?
Yep, thank you. So I think, yes, absolutely one of the major changes, which just happens to, of course, also coincide with FinTech Week, is, yes, the rise of fintechs, which are obviously both an opportunity as well as a challenge, I think, to incumbents. So there's lots of challenger banks which popped up over the last decades, trying to grab market share. Most of them, they started in retail banking, payments, simple loans, cross-border transactions, etc. But more and more, they're also trying to get into the more lucrative wealth management and therefore also becoming a threat to some of the incumbent banks. And incumbents platform has become more and more an important topic for banks to deliver their value propositions towards clients. And I think with the rise of fintechs, banks also had to adopt and they had to adjust. So from building their own legacy platforms, which sometimes today are 40, 50 years old. Sometimes there's a joke with one of the big ones here in Hong Kong that their retail banking core platform has been around since before the moon landing. So obviously there's a lot of legacy, and that legacy also brings certain issues and constraints with it. So I'd say one of the main challenges which banks have to stay competitive and to deliver best-in-class propositions towards their clients is to open up their technology platforms for those fintechs, stop building themselves, keep it basically where they have the competitive edge. They keep that in-house, but where they can accelerate, go to markets, stay up with the industry, that's where they should be able to integrate some of those third-party components.
So with that being said, I wanted to ask you, based on your experience, right, of the landscape and the use cases you've seen here, what separates those who can do it versus those who lack?
I'd say the tangible outcomes, if you do it successfully, is firstly, opening up new revenue streams much faster. So we've had conversations with some insurance companies earlier this week, and on their legacy platforms, it can take 3-4 months for an end-to-end product deployment. So from structuring the product, going through all of the technology capabilities, governance, etc., to really go to market. If you look at some of the challengers, they can do that within 4 weeks. So go to market is obviously key to get those revenues. And secondly, then also operational efficiencies. So if you have outdated code base, it's a constraint on the organization. If you want to make changes, you need to, it's not as easy as if you have newer platforms.
I was going to say 3 to 4 months. That's quite fast.
It is still fast. So not complex products, obviously, but even, some standard ones. Still, it's a multiple of 3-4x compared to some of the challenger ones.
I get it. So if I may, we're going to do our first buzzword, generative AI, because, everyone talks about Gen AI. Where do you think it could fundamentally change the wealth management experience beyond chatbots? Because a lot of the examples we see out there are, chatbots having an easier way for, the end user to interact with whatever platform and the advisor, et cetera. But where can we go beyond chatbots?
Yeah, I'd say how it typically is if a new technology comes along, and especially in banking where regulations are obviously a key aspect of it, it typically starts off relatively slow. The big ones typically don't want to be the first movers. They will sort of assess, until certain use cases are proven, until certain business outcomes are proven that they can actually see the benefits and prove the benefits of investing, and especially Gen AI. There's a lot of investment required until you can actually capture those benefits. So I would say it started off relatively small, and again, just as well due to regulations, mainly started within in-house use cases, right? So knowledge sharing platforms, yes, where you type it into a chatbot, etc. But I would say one of the main areas where a lot more use cases have evolved is obviously on the operational efficiency side. So things like, for example, voluntary corporate action flows using Gen AI capabilities to streamline that. Asset transfer, so kind of boring topics, I would say, but obviously core activities that banks undertake. So there's lots of streamlining opportunities to reduce manual efforts. So there's obviously the cost reduction side. But secondly, we also see now more and more use cases which go towards the relationship manager to basically help them deliver their services towards customers, and then even directly to customers. I'd say all of those use cases are still chatbot based because that's sort of the way you interact with the model, right? So how do you prompt queries, etc. But we also see now more capabilities or more use cases which go directly into voice generated. So for example, so you just speak to your AI and they will basically help you capture the information, deliver the services that you need. So I think it moves away from typing more towards also voice-generated prompting, etc.
I do see a lot more of that usage in countries that are not English-speaking because it's typically a little bit harder, for example, for some of the characters to type in the phone. Mm-hmm. So I see more examples of companies using that. It's easier to interact with a voice than to type. Yep. So I do look forward to it. Although I would have to say, I think the first time I saw voice AI use cases popped up, that was like about 8 years ago. Mm-hmm. It's still developing. So
yeah, absolutely. Yeah, because it needs to develop. The libraries need to develop, etc. But I think, again, the changes that you see every year, the new models coming out, etc. It's exponential development, right? So
it's getting better.
Yeah, absolutely.
Mm-hmm. So you're in Asia, in Hong Kong. APAC is the hotbed for wealth management. You had come from Switzerland, and, before we started recording, we were talking about, what you were doing. If you were to take different regions, right, you look at Europe, you look at the US, North America, you look at APAC, how are these regions operating differently?
Yes, so before I joined Synpulse, I was on the bank side for the biggest player in Switzerland. And yes, I was advising institutional clients, so mainly pension funds on their portfolios, as well as high net worth individuals. And I'd say one of the main differences, which still holds true today, there's a shift, but it still holds true today mostly, is the, I'd say, involvement of the clients in investment decisions. So It was typically relatively straightforward conversations back in Switzerland. So you're prepared for the meetings, you had your talking points, you had your market updates, etc. But there weren't really a lot of challenges from the clients on the investment decisions that you've taken for them, or if you gave them advice in an advisory mandate, then they would typically follow. Even if markets weren't doing that great, they would still trust you and they would follow you because they see you as the expert. I'd say the main difference in Asia is that certainly discretionary portfolio management, while it's growing, the allocations, it's still less than in Europe and in the US. And also on the advisory mandate side, or general advisory, clients are a lot more opinionated and involved in decision making. So trusting your house views, your strategic asset allocations, etc., is much less common here. And they would typically ask a lot more questions about single lines. So, for example, should I buy stock X or should I buy stock Y? So you need to be a lot more into the details of single line stocks or other product types compared to Europe, where it's more common to maybe speak on sectors or even asset class level.
Are there anything specifically that you think in Asia and APAC that we can learn from other regions in terms of tech deployment, in terms of how we leverage, what's out there to help clients get to where they need?
I'd say a lot of it is a shift in mindset, but it's actually not only on the client side, but also on the relationship manager side, especially in private banking. So I recall when we started introducing more fee-based advisory mandates to Asia back in 2019, 2020. Actually, the main challenge was to convince the relationship managers. The initial response was always, this will not work in Asia. My clients will not buy this, etc., without even testing it actually with clients. And when we launched the mandates, we could actually see that the pickup rate was there. Obviously, it needed localization, etc. The way that we charged for it or the service level itself. But generally, there is a need, and there is also, they are receptive to receiving those advisory services. So I'd say one thing that Asia could learn from Europe is the models itself, communicating the benefits of those services, bank-wide services that you can offer to your client. I think the way that it is portrayed and delivered to the clients, that could be improved, while at the same time obviously accounting for the local requirements. So they will always want to be, more involved in those decisions. But again, that is just adjusting a value proposition to the local requirements.
Yeah, I think it's cultural.
Yeah, it is cultural.
Right.
But the interesting thing is, in a market downturn, that the clients will suddenly call you. You don't need to call them anymore, right? And then suddenly they will ask you, oh, why have you not done this? Why have you not done that, etc. So, of course, if it's a bull market, everyone earns money, and then it's many investors, they will not look, okay, I made 15%, while maybe I could have made 20% because I still did great. But as soon as you lose money, I think that's where opinions shift. And people, they will call.
Second buzzword for the hour, agentic AI, because of course you can't get away without asking people, what's your opinion about agentic AI? I've heard all sorts. One says, we're way too early. It'll come here, we'll get here. And then you see a lot of different players in different sectors in the different industries getting ready, putting their infrastructure. Mm-hmm. And then you see all the way on the other side, agentic AI is our future. We don't need humans anymore. It's going to replace everything we do. Curious to hear your point of view. Where do you sit on that, especially within wealth management, when you need the human touch, you need the trust, you need all of that?
Yes, I think in short, I don't see it as a risk, but I see it as an opportunity for banks, especially as well on the private banking side, where yes, I think most would agree that the human touch will still be an important factor. I think one of the changes with agentic AI, so if you look at banks when AI first came along, most of the banks, they sort of developed their AI innovation labs and hubs, etc. And it was very centrally driven where you gather use cases, etc., from various business functions. Then a central committee would sort of, develop business cases for those, payback periods, etc. And then they would start investing into certain use cases and they would test it. Obviously, one of the main drawbacks there is that it takes a lot of time to go through all of that governance and that whole process. And today, with the fast-moving environment in AI, that will give you, of course, a competitive disadvantage if you follow that. So banks are now moving towards different models where they try to more democratize AI use cases. And that's also the way that we operate within Synpulse, for example. So on our product solution side, we developed a sort of AI nexus where anyone can create their own agents. So they can, write the logic. They don't need to be, coders. They can just business context, and then the code will be created. And they can create those agents, and then they can share it for everyone to be accessible. You can choose whatever underlying language model you want to use. And this is, I think, where the industry is also heading towards. So everyone can just try. They can build their own agents, they can share it with everyone, and then you can see which ones get picked up, right? So it's just like a marketplace where you have agents, and you can then leverage those which others have built. So this takes away, I think, that whole process of, writing business cases, defining payback periods, etc., which will make you a lot more agile as an organization. And I believe this is where it's moving towards. And, agents can be very simple, or I've seen independent financial advisors, they've built, obviously because they didn't have a technology platform from an insurer or from a bank, so they've built end-to-end workflows with agents, and they focus mainly now. So that will take care of all of the admin, it will help create proposals, etc., and they can fully take care of the client relationships. So obviously that time is spent a lot more effective, and that's, I think, where, yes, the benefits are for the industry. So that's why I think the main opportunity for RMs is not that they will be replaced, but they will become more effective and they will be able to do more within the same amount of time.
So more time to wine and dine.
Yeah, exactly.
All right. Well, before we go, since it is towards the end of the year, what is the one thing that you look forward to next year?
Again, I think 2024 and also beginning of 2025, it's been a lot of foundational work that the financial industry was doing. They are still doing it, so it's not like it's all solved. But obviously, in the context of AI, there's a lot of foundational work required in terms of data management, data governance, etc., to actually make your data available to feed into those models. So I'd say a lot of investments and a lot of progress has been made within that space. And I've heard from institutions, they have use cases, 1,000+ use cases for business functions. So I think with that foundational work being done, now really going into the rapid deployment of those use cases, I'd say it will accelerate a lot more into 2026.
That's what you look forward to?
Definitely something to look forward to.
Okay, well, I can't wait to catch up with you next time when I'm back in the city. But until then, thank you so much for joining us. And for the rest of our listeners, thank you so much for joining us for another episode of One Vision. We'll talk to you next week.